what's going on? Good morning, good afternoon, good evening, whenever you are watching this week's video. Y'all probably are like, why does she record all these videos with her glasses off? Y'all, my eye is killing me. I don't know if I touched something in this dusty tail office with stuff being cold and hot and all this kind of stuff and messed up my eye, or if it really truly is the temperature changes, because when it get cold, the noses get to bleeding, eyes get to acting up. It's crazy. I have allergies like crazy, and I got these big tail eyes. Y'all see them? I had to keep them hydrated. Hydrated? Yeah, hydrated. Cause I have dry eye. How you gonna have big old eyes and have dry eye? But that's what happens. Needless to say, for those of you that this may be your first video with me, I am none other than Patrice L. Berry, EA, the Tax Cop. Welcome to this weekly newsletter. I want to take the time and clarify some stuff because people have been asking questions that really fall into tax planning time versus what I would do during tax preparation. And so if you've never requested a tax consultation with me, or this is your first time working with me or thinking about working with Total Tax Experience for tax prep, I'm going to tell you the difference. All right. Essentially, tax preparation, we go and we do a look back at the previous year. Because why? The federal government and the state want to know your business. They have an idea, why? Because everybody already dry snitched on you, about how much money you've made. But they don't know how many deductions or expenses you're really entitled to until you do a report, aka a tax return. So it's a look back and a reconciliation of what happened in the previous year. So what happens is in January, we start getting our tax documents. And what happens then from there is we fill out our report, aka our tax return. If it's an individual, it's a 1040. If it's a partnership, it's a 1065. If it is a S corporation, it's 1120S. If it's a C corporation, it's 1120. If it's an estate, it's a 1041. And then, of course, we have other tax returns, like a true estate tax return, right? 760. And then we have 990s for nonprofits. So everybody got to reconcile and tell them themselves. Yes, some of the filing dates are different. Definitely pay attention to them. Pass-through entities, that would be our estate and trust return. Our partnerships, our S corporations, are due by March 15th every year, right? So that means your extension got to be in by that time too. And then our individual and our C corporations, actual official like state return, their estate returns and stuff, those are due on normally a month later, April 15th, right? Depending on if there's holidays and things of that nature. So this is the thing I want y'all to pay attention to though. No matter what your entity is, right? Pass-through entities at the federal level do not pay taxes. The people that own the business, right? Them owners that didn't want to tell who they were on that beneficial ownership stuff, them people, right? That get reported on the tax return, they got to pay, that K1 go to, those people, them folks right there, those people are the ones who pay the taxes. Each individual that has ownership in the business pays the taxes because it passes through to them. That's what we call a pass through at the federal level. Now, at the state level, you can either make an election for it to pass through, or the entity itself can actually pay the tax. It depends on what state you're in, right? And if your state has to pay taxes. Now, for 1040s, C corporations, etc., they will pay their own taxes. Now, I got estates and trusts, they pay their own taxes if it falls into that category that they actually have to pay taxes. They will pay them taxes as well. But that's how it works. At the federal level, pass-through entities do not pay taxes. The people that own the business pay taxes, and that's why it's called a pass-through entity. The IRS and the state comptrollers want to know what really went down. And in most cases, I'm going to say 99% of the time, the state return is based off of information that is captured on, or not captured on, the federal return. So when I say captured or not captured, there's certain deductions you may be able to get at the state that you're not able to get at federal, or there are certain deductions you can only receive at the state if it ends up on your federal return. So that's why I say not or cannot, right? So that is the difference. It is a reactive type of process. We've already gone through the year. We are just reporting stuff. We letting you know what's going on at that time. We are not doing proactive stuff. Why? Because it's too late. The year has already gone. Now, the one thing that does happen in the new year is if you are trying to pay estimated taxes, that Q4 payment can be made come January 15th of the following year. So if you are somebody who is like, hey, I've been owing, but I've been stashing my money away, whether you're a business or a person who's a W-2, it don't matter. But you tired of paying and you like, look, I just kind of want to get in front of it. I don't know what my tax situation going to be. I don't know if I'm getting a refund. I don't know if I owe. You can make an estimated tax payment by January 15th at the federal level. States, you need to make them and stroke that check by December 31st. Okay, so that's the difference. We got on the federal level, we got until January 15th to make that estimated tax payment. And even if you don't know if you will owe, I want to let y'all know something. If you pay the money, it's not money that you will not get back. So please don't have that fear. If you paid the money and you rightfully do not owe it, once we reconcile everything and your tax return is filed, what will happen is they're going to give you your money back. Now, they ain't going to give it back to you with no interest or penalties like they be charging you, but they will give it back to you. That is called a refund. We are just shoring up because remember back in the day, a couple months ago, I showed you the 4 numbers that matter on a tax return. If you didn't get that, let us know and we'll make sure that we put that back out there. The 4 numbers that are important. And all it is we are making payments that we think we may owe to cover ourselves. And if we pay too much, we get a refund back. So look at it that way. Not like, oh my God, they're going to keep my money. I'm never going to get my money back. No, you will get your money back if you are supposed to get a refund. If you overpaid, you will get your money back. So please don't think like that. Okay? Now, tax planning is something totally different. Tax planning is us being proactive. We are looking at ways that we can move forward in the current year. So not in 2024 because we get ready to file 2024 taxes. But during 2025, we are looking at strategies that are in the tax code that we can leverage that are to your benefit. Now, some of these strategies we may not be, y'all see my eye, able to implement fully in year 2025. We may have to do it over a several year period. But we won't know that until we sit there, right? And you give us permission to actually identify some strategies that may work in your tax situation. Tax planning is not for everybody. Why? Because everybody don't qualify. At some places, if all you have is a W-2 and you don't have any other ways that I can get some other deductions, honey, I can't tax plan for you. All we can do is make sure you're withholding enough money throughout the year. And if you're not, make sure you're paying your estimated taxes. I'm not saying that to discriminate against everybody. Tax planning ain't for everybody because everybody is not a great candidate for tax planning. That does not mean that you can't be proactive and that you can't educate yourself and that you can't get in front of stuff. But I want y'all to understand who the tax code is made for. The tax code, the loopholes that exist are really for business owners and investors. That's who the code was made for. Why? Because them people can actually get enough money behind a lobbyist who convinces Congress to put their own interest into the tax code. That's truly what it is. I'm just being very transparent and very honest. If you are not a good candidate for tax planning, I'll let you know that. If you want to mine and you ask, I'll let you know that. I'm not out here trying to take money just to be taking money. All day long, I can serve you in a tax preparation stance. I may be able to do a one-off, let's have a conversation of some things you can put in place, but you may not be a viable candidate for us to build a robust tax plan for. And that's okay. Because you may not be it right now, but as you level up and get into new things and get new ideas and get comfortable, you may down the road be a person that is all day ready for a tax plan, and we want to be able to serve you in that manner. For those of you who now are like, what? Yours truly, Patrice L. Berry, EA, aka the Tax Cop, is currently, all right, back in October, got our certification as a certified tax coach. Yes, I did. I will pull the plaque out, but it's underneath the desk. Y'all, I don't be fancy like that. You see the pictures and stuff like that in the background. I may eventually put it on the wall. I am a certified tax coach, and I would love to have a conversation or reach out with you to determine whether or not you fall in that season of being or a viable candidate for us creating a tax plan for you or us not creating a tax plan for you. I don't want anybody to feel like they can't be. But if you know somebody who is like, look, I feel like they at least need to have a conversation, a one-off consult, just to figure out where they stand, y'all know if you go to the website, either thetaxcop.com or Total Tax Experience, you can schedule an appointment and we will figure out where you fall. I am not here to not pour into you, but that's only if you're willing to have us pour into you into that manner, because it's going to take work. You can ask, well, you can't, because you don't know necessarily all my people that have been working with me from tax planning situations. But my clients that have been working with me for the past couple of years from a tax planning situation, they may be with me for the long haul. They may be with me for a year. They may be with me for 2 years. When we go into that agreement, we go into it for a year to figure out how we're going to be from January to December. Because what happens the next year can be very different, not only in a person's life, but it could happen with the tax code. Stuff could change. Who knows? Y'all saw upsets all left and right. We seeing stuff happen all around us. Anything could change. And so therefore, I just want you to know there is a valuable difference between preparation and planning. Even though they both begin with P's, there's a difference. And here at Total Tax Experience, we do both. We do prep, we do planning, we love on you. We are here to purposefully make sure that you understand and can demystify all this part of the tax code and accounting, because it can be beneficial for you. All right? So, letting you know that there's a difference. And the biggest difference that you need to understand is that during tax prep time, we are not also doing planning. People are paying for planning. Planning is like a VIP status. It's a lot that goes into that strategy. It's a lot of time that goes into building and meeting with those people on a quarterly basis to make sure that we are loving on them and making sure that we are adjusting in real time. They get a different type of love than I give to you when I do a prep only situation. And so I want you to understand, we're not being snooty booties. We're not trying to be too selective. It is just the way it works when we are in that environment, and the level of energy, research, etc. that happens in planning is not the same that happens when it comes to prep. If you got any questions after hearing it and you've watched to the end, let me know. I appreciate you all and so glad that y'all are still part of the Tax Cop crew. Until next week, peace.